Jim, good to see you today. Talk to me a little bit about what you think is driving market action today, and especially the way that midterms fit into that.
Certainly, when we look at the midterms, we're looking at divided government as the ideal outcome here. So whether it's the House or the Senate, we're somewhat indifferent, but as long as you have divided government, because for investors, that means nothing too bad can happen. Both parties have to come together. So to us, that's a good thing. And if that's the outcome that we figured out that we have tomorrow morning, I'll be happy.
We've waded our way through earnings seasons. We're not over yet, but we've slogged our way through it. What's your takeaway about how that's affected investor sentiment?
Earnings season has been really choppy. We've had some nice winners and companies really performing well. And then we've had some big losers. And the big tech sort of complex has been in that negative category. So it's been very mixed.
And when we're talking about what the Fed is going to do and how much they keep continuing to raise, is the market sort of shrugging off this news, or do you think that this still has a huge impact on the way we see stocks going?
It's a huge deal. We've been fighting it all year long in terms of the Fed raising rates way more than we thought. It's almost like the family taking a car ride and the kids saying over and over again, are we there yet? Are we there yet? And the parents, being Fed Chair Powell, saying, not yet, not yet. But we're seeing signs that we're pretty darn close. And you look at all the economic signals that are starting to slow down, not in the headline data, not in the lagging government data, but happening. And FedEx is just the latest example today, talking about parking planes because the demand is not there. So are we there yet? We're getting pretty darn close. And I think that becomes an important turning point for the market because you're no longer fighting the Fed at that point.
So I hear you sort of suggesting that the terminal federal funds rate is somewhere in the 4 3/4 to 5 1/4 level.
I'm really not that smart, but we're probably getting close. And if that's the case, and we're sort of seeing the light at the end of the tunnel, I think that investors can start valuing companies on their earnings prospects in 2023, as opposed to purely how high are rates going to go. And for an active investor, that's a really welcome thing for us.
All right, Jim, thank you so much for your insights today. We'll have you back soon. We appreciate it.
Shepard Smith here. Thanks for watching CNBC on YouTube.